What's up, guys? Welcome to Money Grow, the channel all about making your money grow. This is $100,000 that I've saved up exactly for this video series, and I'm super excited to share it with you guys. I'm going to be taking this money and opening a brokerage account with it and running the wheel option selling strategy. Now, if you have no idea what that means, don't worry, because in my next video, I'll be going over exactly how it works. I'll link that video in the description just in case you're watching this after I've already uploaded it. But before you watch that video, you'll need to know what call options and put options are and how they work. So in today's video, I'm going to be explaining everything you need to know in super simple terms. If the information in my video helps you, I would really appreciate it if you like the video and subscribe to my channel. And if you want to follow every single one of my trades in real time, consider supporting me on Patreon. I'll have all that information listed on there. Link down below. Before we get into the video, here's a short disclaimer. I am not a licensed financial advisor, and everything I talk about in my videos are my personal opinions and for educational and entertainment purposes only. As you may have noticed, this channel is brand new. I'm going to be targeting a wide variety of investors from beginner to intermediate and all the way to advanced. I plan to start by posting 2 videos per week, one for showcasing my wheel portfolio and showing its progress, which I'll explain more in my next video, and one for teaching a valuable personal finance topic like whether or not you should get a credit card, explaining bank accounts, savings accounts, brokerage accounts, retirement accounts, you name it. And I mean literally, you name it. Many of my future videos will be inspired by your comments, so please leave them down below as I'll be reading all of them. Together, we will be diving into the seemingly complicated world of the stock market and investing in general. My goal is to become your ultimate resource for personal finance related topics. For my wheel portfolio, I'm going to be using Webull because it's super user friendly. They have $0 options per contract fees, which is actually a bit rare because some of these larger brokerages say they have free options trades, but they charge you a 65-cent fee per contract whenever you buy or sell options, which might not seem like a lot, but the fees really add up and eat into your profits. If you'd like to start using Webull as well, please click my referral link down in the description. You'll get a free stock valued up to $1,600 when you sign up and fund your account with $100. I would really appreciate it if you did that, as it would really help out the channel. I also have referral links to M1 Finance, which I also use, where you can get $20 cash for signing up, and Robinhood, again, which I also use, where you can get a free stock valued up to $200 for signing up. So my favorite way of learning things, and I'm sure it's the same with a lot of you guys, is visually and with a real life example. So that's exactly how I'm going to be explaining most topics here on the channel. Alright, let's get right to it. The 2 most basic options contracts are calls and puts. You can buy these directly, or you can sell these to other investors. If you buy a call, you're betting on the stock going up. Alternatively, if you buy a put, you're betting on the stock going down. Obviously, there's a lot more to it, but that's the most simple explanation. So what exactly are you purchasing when you buy a call option? You're purchasing the option to buy 100 shares of a particular stock at the strike price you choose on or before the expiration date of the contract. For our example, let's take a look at a real call option that you can really buy. We'll use a household name for our stock. Let's go with Walmart. As of the filming of this video, which is September 3rd, 2020, Walmart is trading at $141.37 per share. As of right now, you can buy this Walmart call option for $8.60 per share, which is written like this. BTO, which stands for the type of option the trade is. In this case, it means buy to open, 1 times, which means we're buying 1 contract. WMT, which is the ticker symbol of the company, in this case it's Walmart, $150. That represents the strike price that we chose. The C shows that it's a call option, and the 11-20-20 shows that the expiration date is November 20th, 2020. So let's go over the basics. One option represents 100 shares of stock. So in this case, you must pay $8.60 times 100, which equals to $860 for this call option. So by paying that money, you're purchasing the option to buy 100 shares of Walmart on or before November 20th, 2020 at $150 per share. And since we paid $8.60 per share for our contract, we have to include that in our math so we know when this trade becomes profitable. So if we can buy 100 shares at $150 each, and our cost for this call option was $8.60 per share, our trade becomes profitable whenever Walmart rises above $158.60. I got there by adding the strike price, $150, by the cost of the call option, which is $8.60 per share. Remember, Walmart shares are currently trading for $141.37 per share, but this option expires about 2.5 months from today, so there's still a lot of time for the price to rise. Let's fast forward to November 10th, 2020, and pretend that Walmart is trading at $180 per share. There are still 10 days left before our call option expires, and our trade is already very profitable. Since our cost per share, as we just went over, is $158.60, we can do something that is called exercising the contract. This is when you exercise your option to purchase 100 shares at $150 per share. Now, most people don't do this because they would need to have $15,000 cash in their account to do so. So instead, you simply sell your call option to someone else. Since there are still 10 days before your option expires and you picked a popular stock like Walmart, there are still many people that would happily buy that call option from you with the hope that Walmart will continue going up for the next 10 days. Just how you bought this contract 2 months ago with the same mindset, now someone else is willing to buy this contract with the mindset that they're going to be profitable within the next 10 days. So you're probably wondering, how much is your call option worth now? There's something called intrinsic value, which is exactly how much profit you would make from exercising the contract. In our case, we can exercise at $150 per share and instantly sell the shares at the going market price of $180 per share. So there is a $30 profit per share. And since one option is 100 shares and your intrinsic value of the option is $30 times 100, that's $3,000. So your call option will be worth at least $3,000. Since you bought this contract for $860, that leaves you with a profit of $2,140 in just 2 short months. Not bad at all. However, let me tell you why your option might be worth even more than $3,000. It's something called extrinsic value. This is value that inflates the price of an option and adds a premium on top of the intrinsic value, which we already went over. Remember how 2 months ago you could have just bought shares of Walmart at the going market price of $141.37 per share and called it a day? But instead, you paid $860 for the option to buy them at $150. When you purchased that option, practically the full price of it was extrinsic value because there was no intrinsic value at the time. If you would have exercised that option as soon as you bought it, you would have lost money. You would have bought 100 shares of Walmart for $150 each, when they're only worth $141.37 each. And on top of that, you paid $8.60 per share for the contract. So you would have technically had a cost basis of $158.60 per share on shares that are only worth $141.37. However, the call option that you purchased turned out to be very profitable in our hypothetical scenario because you correctly predicted that Walmart would go up in price. The same thing happens when you decide to take profit and sell your call to someone else. That person, just like you were before, will be willing to pay a premium for your call option because they think it'll keep going up for another 10 days until it finally expires. So that's why most people that trade options contracts never actually exercise those contracts. Instead, they just sell them to someone else once they're profitable. Now we'll get into put options. Buying a put gives you the option to sell 100 shares of stock at a strike price that you choose on or before the expiration date. But remember, like I just explained, you don't actually need to own any shares because you don't actually need to exercise the contract. You can simply sell the put option to someone else once it's profitable. Since we used Walmart for our call example, let's keep it simple and use Walmart for our put example. We know it's trading for $141.37 per share, but in this case, we are predicting that Walmart will be going down within the next 2.5 months. This is a put option we're going to buy for $4.75 per share. It's a real option that you can really buy as of September 3rd. Maybe you're watching this in the future. So this is a put option we're going to buy for $4.75 per share. We're going to do a quick recap exactly how we went over the call option from earlier. We're going to go over what everything means on this put option, and a lot of it you'll realize is very similar. So BTO stands for buy to open. 1 times shows we're buying one contract. WMT is the ticker symbol for the company that we chose. In this case, it's Walmart. $130 represents the strike price that we chose. P shows that it's a put option. And the 11/20/20 shows that the expiration date is November 20, 2020. So we chose a lot of the same things, the same expiration as the call option. So now we're going to explain how this works. So this may be a little repetitive, but I promise that it'll really help you recap and really retain the information. So again, one option represents 100 shares of stock. So in this case, you must pay $4.75 times 100, which equals $475 for this put option. So by paying that money, you're purchasing the option to sell 100 shares of Walmart on or before November 20th, 2020 at $130 per share. And since we paid $4.75 per share for our contract, we have to include that in our math so we know when the trade becomes profitable. So if we can sell 100 shares at $130 and our cost for this put option was $4.75 per share, our trade becomes profitable whenever Walmart falls below $125.25. The way I got that number is the strike price, 130, minus the cost of the option, $4.75 per share. And remember, Walmart shares are currently trading for $141.37 per share. But this option expires about 2.5 months from today. So there's still a lot of time for the price to fall. Let's fast forward to November 10th, 2020 and pretend that Walmart is trading at $100 per share. There are still 10 days left before our put option expires and our trade is already very profitable. This is a very similar situation to the call option, but now it's reversed. Now Walmart has dropped in price. Since the intrinsic value of this contract is calculated as $130 minus $100, that's $30 per share. And remember, one contract equals 100 shares. So the way we find the intrinsic value of the contract is $30 times 100 equals 3,000. That means our put option is now valued at least $3,000. And since we paid $475 for the contract, we are sitting on a profit of at least $2,525 plus some potential extrinsic value premium like we explained earlier. So we just learned about buying calls and buying puts. But remember how I said you could also sell calls and sell puts to investors? In our examples from before, we bought a call option for $860 and a put option for $475. But someone had to have sold us those options. We paid someone all that money to be able to own those options. The wheel option selling strategy is all about selling calls and selling puts to investors and collecting that sweet, sweet premium. And in my next video, I'll be starting that and showing you my brand new $100,000 wheel portfolio. By the time you're watching this video, I have most likely already made a few trades, and if you like to follow them and even copy them, please consider supporting me on Patreon, as I will always post there immediately after I make a trade. But remember, investments come with risk, and you should do your own research before making any investment decisions. Thank you guys so much for watching my first ever video here on YouTube. I hope you'll be back for future videos, and as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.